Let's focus on global financials. We're joined by Robert Webb for Hot Picks today, portfolio manager at Hamilton ETFs. Let's jump into it. Your first idea, and thanks very much for joining us, is HDFC Bank, and it's huge in India.
That's right. HDFC is the largest private sector bank in India. It has about 16% of loans in India. We like HDFC for three reasons. The first is India, the second is its history of earnings growth, and the third is its valuation.
Right, and obviously a play on the Indian economy, and wow, it's done well over the past year.
Yes, well, particularly recently, but the Indian economy is growing at 11% nominal. Private sector banks are taking share from public sector banks consistently, so we'd expect lending growth to continue mid-teens, and HDFC should be a beneficiary after a period of consolidating its loans.
It's not a huge yield play, though.
It is not. It's there for its growth, the stability of the Indian economy, and its attractive valuation.
Your next idea went public in 2021, tough market, Ryan Specialty Holdings, and it's a big insurance broker south of the border.
That's right. Ryan Specialty is an insurance broker. That's a sector that has exposure to pricing in insurance, but not to underwriting. So it's a lower risk sector, and typically insurance brokers have been showing revenue growth of 6 to 8% on an organic basis, plus acquisitions, plus a little bit of improvement in operating margins each year. We'd expect Ryan to see EPS growth of 15 to 20% in the coming year.
So I think of insurance brokers as being entrepreneurs and just one-woman shops or one-man shops, but they're a corporate model, obviously.
They are indeed, and typically they're buying large groups of insurance brokers. Ryan is focused on the excess and surplus area, which is a growing area within insurance brokerage. Insurance in the U.S. is divided between two markets, one which is more boilerplate and one which is not, and that's E&S. Things like climate change, cybersecurity, and social inflation, large court verdicts are all areas that get more pricing, more complicated terms, and as a consequence, faster growing more recently, and that's where Ryan is mostly exposed.
Wow, cybercrime insurance, that's kind of interesting.
It is.
Yeah, how do you measure the risk there? Yeah. And then your final idea, you say it's a little more volatile, Block, the payments company, parent of Square. That's
right. Block is a new idea in HFG, the Hamilton Global Financials Fund. It is attractive for its growth history. It's grown at 36% a year for the last 7 years. And it invests 13% of its expenses in R&D. At the same time, its valuation is very cheap at the moment. At the start of the year, the stock was 100. Today, it's low 50s and trading at 11 times. Never traded below 13 times in prior years and traded 18 times at the start of the year.
And what is their growth model?
They have two main areas for growth. Cash App, which is a consumer-based app. They provide financial services as well as software to help consumers manage all of their finances. They do tax. They help you with your tax return. And the other is Square Seller, which helps small businesses. They've got about 4 million small businesses in the U.S. that they're currently selling hardware, software, and financial services to. They're adding new services consistently over time, and that should stimulate further growth.
So you mentioned this ETF. It's one of two international ETFs at Hamilton, but it's the Hamilton Global Financial ETF, the symbol HFG. Now, I don't think we have the chart. I'm sorry about that. Not huge yet. Assets of about 53 million.
That's right. HFG is a global financials ETF. It is in all three of the main sectors that I've just mentioned. In fact, banks, insurance, and diversified financials, diversified across 12 different subsectors and about 18 to 20 countries. So we manage risk through diversification, and as you've seen, some picks that are less economically sensitive.
Right, I'm showing it up. Oh, there's the chart. Thank you, control room. And it's up 20% in the past year. Not too bad. Not a huge yield play, I don't think. My Bloomberg screen is showing a yield on the ETF of about 3%.
That's about right. We're not managing it for yield. We're managing it for strong risk-adjusted returns. And in the past year, we won an award for risk-adjusted returns from the Fund Data organization.
Robert, thank you very much indeed.
It's my pleasure. Thanks very much.
Robert Webb, portfolio manager at Hamilton ETFs. Coming up.